All right, good morning, everybody. Good morning. Yes, we'll get cranking here. So this morning I've been asked to talk about two things, the driving outlook and also for sunflower. So we're gonna go through this. I want to make sure that I leave some time for questions. I know I'm looking at Scott for time control here to make sure that I don't overrun too badly. I have a bad habit of overrunning, but here we go. So here's my contact information. If you do think of something later on that as you're driving home that you want to talk about, I'm happy to do that. Just please understand my travel schedule until the end of March is like packed solid. So send an email, send a text. I'll get back to you as soon as I can, but please give me a little bit of grace because I'm traveling a lot and sometimes I can't always be as responsive as what everybody wants. So let's talk about dry beans in general, kind of nationally, all the different classes of dry beans together. On Friday, January 10th, USDA is going to have like a huge, massive data dump. We're going to get like 4 major reports that are going to give us a whole bunch of updates. And one of those updates is going to be on the production numbers. So for the specialty crops, USDA usually does not update production numbers monthly. They only provide that like quarterly or periodically. So we will not get specific production information for by class, by state until Friday. Then we're gonna have this huge data dump. I'm gonna have like 800 pages of stuff I gotta print out and wander through. So some of this is going to be based off the estimates we got earlier in the fall, but it gives you a general idea from a marketing standpoint where we're sitting. So if we look at North Dakota dry bean production, and I'm going to talk about production, how many hundredweight have been produced. We're up about 30% from last year. Now understand last year was not a really great year. So we're actually back to kind of normal productions. We had a couple of years, I'll show you some graphics in a minute. Dry bean production has been slowly slipping. We've been taking those inventories down, things have been becoming tighter. As a result, prices have been higher. Right now, guys, we refilled the supply chain this year. We had a good year from a production standpoint. We've been able to refill not only the supply chain, but also some of the inventories. On a national level, because North Dakota is not the only one that produces dry beans. I know that's hard to believe, but we're not. Nationally, we also were up about 20% from last year. Okay, so not only here, but also nationally, we've had some better numbers. And again, as I said, on Friday, we're going to get some more formal updates. So let's talk about pinto beans first specifically. I know that's a major crop for this region. It's also in North Dakota. We're by far the #1 pinto bean producer in the nation. So this shows historically acreage. So the gold bars are North Dakota acreage. The green bars are everybody else. The blue bar on the far right-hand side is total production, not just for North Dakota, but planted acres for all pinto beans. This was released earlier. So you get an idea our pinto bean acreage rebounded. Our pinto bean acreage recovered because as you notice, we've been taking about 4 years of continuous downward trend. So what does that mean for bean production? How many hundredweight were produced this year? Guess what? Higher acreage, we have good yields, we refill the pipeline. Notice the volatility we have from year to year. This is not a record production for pinto beans, but it's getting close. It's getting close. So that kind of sets the stage for what are buyers, as well as what the bean house is thinking for supply chain and being able to move this product. So when we look at pinto beans on the consumption side, even though we don't have the detailed breakdown, we do have a general idea of how many hundredweight have been produced. What does the supply chain look like? Now we're worried about how fast are we burning through those inventories. So 65 to 75% of pinto beans are used domestically. So pinto beans are primarily a domestic market. Okay. We use it within the country. Now, domestic consumption, whatever commodity you're talking about, usually stays relatively stable. So domestic buyers will usually pay what they need to make sure they get the product they need. Or rephrasing that, they're going to buy the product at a price just high enough it doesn't get on a train and leave. That makes sense? Okay. So whatever the price is, they're going to make sure what they get first, and everything else we got to try and find another home for, which is primarily the export market. So it tends to be relatively stable right now because prices have been coming down. The buyers have been a bit slow. They've been a bit slow to come in, because what happened is they contracted at a higher price. And what they're trying to do is average their buys downward, right? If you're a buyer, you want to average those prices moving downward. Well, if we see prices softening, like on a regular basis, if the trend line is down, what do you do as a buyer? You wait as long as you can until you have to buy something. And when you do come in and buy something, what do? Buy just enough to get you through for the next month or so. It's not like you go in and buy a whole bunch, right? You're nibbling, because you know the supply chain is there. And as a result, that's what's happening in the marketplace. So let's talk about the export market. We got two big exporters, two big destinations. We got Mexico and Dominican Republic. Really quick quiz, of those two countries, which has better financial stability? Mexico, by far. Okay, and I'll show you the numbers in just a minute. So really, as I think about it and look at it, not only short term, but long term, Mexico is usually that key buyer that we look to say, okay, at what point do they come in and start buying more? From a pricing standpoint, from a price movement standpoint, I watch and try and follow what's happening in Mexico very, very closely. Dominican Republic is important, but financially they're not as strong, and so they tend to be like really budget people. They don't buy a lot until they know that it's going to be really the cheapest they can possibly get, just because they don't have the financial resources. So the Mexican export market remains strong. Last year, as I'll show you in just a minute, we had a big surge in pinto bean exports into the Mexican market. That continues to be strong, but not as strong as last year. Okay, it's still good, but not as strong as last year. They've also had, again, because of this prices falling, just like domestic buyers, they're trying to average the buys, the price by price downwards. So they have kind of the same basic marketing buying strategy as the domestic buyers do. The other thing you may have heard about is some logistical problems. How do you get the product from North Dakota into Mexico, into those buyer locations? Yes, we have had some disruptions. There have been some problems. Not as bad as last year. Okay, last year we had much bigger problems than we did this year, but there have been some supply chain issues. In particular, the railroads being able to get into and back out of the country in an efficient manner. It's not the US rail system, it's the transfer into the Mexican rail system that's caused the problems. We've had some of the same issues show up with corn and some wheat shipments from the US into Mexico as well. It's the same thing as, even on a smaller scale, is impacting some of the movements into the Mexican market. So let's look at who buys. And I just wanted to highlight the two big ones, Mexico and Dominican Republic. You can see on the left-hand side is the last 4 years of total exports. And then the two right-hand columns is year to date. Now, the challenge again we have with some of these smaller market crops, like pinto beans and sunflower, we don't get as good of information. It's a lot harder to find out what's going on. So notice that those are year-to-date totals, the two columns on the right-hand side, but they're as of October. Okay, we only have a couple months of the marketing year. So we will get updates, but they're not updated on a regular basis. So this is the best information I could have as of today. So they're updated about once a month. Now notice on the year, so first, Mexico, look at the volumes that they have purchased as a 12-month total. And last year was a really big year, right? Last year was a really good export season into Mexico. On the far right-hand side, those two columns, the one on the far right-hand side, that's year-to-date this year, and the one right next to it is the same time period last year. So we still have some pretty good export sales into Mexico, but not as strong as what we saw the year before. But to understand, last year's numbers were really, really big numbers. Okay. Dominican Republic, notice there was 21, they had a pretty big drop off, but they rebounded. They're at about the same level as last year. You look at Haiti, again, one of those sporadic buyers, they're off a little bit. When we look at the very bottom line, total export sales so far this year versus last year, we're off. Okay. So that other column, that's everybody else that we sell to. They're usually smaller shipments. Some of this might be a seasonal pattern. Remember when I talked about prices, right? Prices have started higher and they're working lower. So if you're one of those buyers that are looking for a really good deal, what are you doing? Waiting for the bottom, right? You're waiting for some better buys later on. So the fact that we're a little bit behind this year, in my mind, is not a huge problem. we do have to watch that export case fairly closely. This is industry estimates. I want to give credit to a company out of Canada that does a pretty good job of monitoring this stuff. I've been following this and using some of this information. I'm not going to go through all these numbers. What I want you to really focus on is two things. Look at the stability of this domestic. And I know that's one of the reasons I do this, is so the guys in front can see and the guys in back can't. Make sure you sit up front. Okay. I do that on purpose, guys. It's, because all the old guys sit in the back, they can't see anyway, right? I resemble that remark, so don't throw any stones. So look at this domestic consumption number, relatively stable. We had a few higher numbers back here. Okay, and this is actually part of COVID. Part of that bump right there was because of COVID. Then here's total exports. Look at how much exports vary from year to year to year. Now this forecast, I want to make sure that forecast is from this company. That forecast was made in October, so it's a little bit old. They will update it now in mid-January. They're going to update these forecasts. Once they get the USDA data, they have rerun their forecasting. I don't think we're going to be able to reach that level. I think that's a little bit steep right now, given what I see and hear in the marketplace. Now, the point is, because of the bigger production numbers, we have now, as I said, refilled the supply chain. Look at our ending stocks or that percentage use. We're back up to those levels where we have reserves, right? There's going to be some in storage coming into harvest time period. So what does that do for pricing? At this point of the season, we seasonally have some very quiet, stable numbers. For those guys that have been in the bean business for a while, this January, February timeframe, in particular, even into March, gets to be pretty quiet. There just isn't a lot of activity in the marketplace. It's not until we get into April and May, as you guys start making your planting decisions, that people get a little more excited to make sure, are we going to have enough beans planted? What are the seed sales? If we see some kind of a pop or a rally, it might be because of some planting issues. But my expectation, given the fact we have beans in the supply chain and seasonally, typically this time of year, we have a pretty quiet marketplace. That's what I expect. What are some of the things that might change that? And go back one slide. Who is our number one buyer of pinto beans? Mexico. Have we had some issues with Mexico? Have there been some discussions about trade policy with Mexico? The two things I cannot forecast, I'm really crappy at, is weather, because that's Daryl Richardson, and politics. And I don't know what is going to happen given the new political environment we're going to face. I have no idea how this is going to play out. So anytime as a farmer or in trying to sell your crops, anytime anybody mentions Mexico, your ears should pop up and pay attention very carefully, because Mexico is not only our number one pinto bean buyer, they're our number one corn buyer, they're our number one wheat buyer, and they're our number two soybean buyer. So anytime you hear Mexico on the news, listen carefully, because trade relations with Mexico are critical for prices in this region. Okay? I have no idea what's going to happen politically. I mean, if you guys have any insights, please let me know. I'd be happy to hear your opinions. All right, let's move on to navy beans. Navy beans are a very different kind of situation right now. We actually have planted acreage that have been dropping and dropping pretty steadily for the last couple of years. When we look at total production, again, yields are okay, but because of the lower acreage, the volumes are down. So we're starting to tighten up the balance sheet. We're starting to tighten up the supply chain on the navy bean side. Domestic use, about half. Really quick rule of thumb, about half is used domestically, about half of it is exported. Domestic use, again, historically relatively stable. That's across all commodities. It's not unique to pinto beans. Three big customers, United Kingdom or England, Italy, and Canada. Now, on a comment on the very bottom, please understand a lot of the pinto beans, or navy beans, excuse me, that go from produced in the US, transferred to Canada. They're basically transshipped. They move from here to Canada, and then Canada back primarily into Europe. Okay, the Europeans are big buyers of navy beans. Okay, now export sales, interesting enough, to Italy have been relatively stable. And actually last year was a really good year for Navy sales into Italy. And this year it looks like again continued strong demand base. I'm not sure why that's happening. I tried to find out and I just have kind of run into a wall on exactly what's going on within that Italy market that's causing that. I'm guessing it has something to do with some of the trade issues with Turkey, but well, I can't verify that. UK and Canada are a little bit lower. So again, let's just look at the numbers. Again, United Kingdom tends to be a really good customer for us. I do want to point out what happened in 2022. Actually, it started in 21 and into 22. That was also some trade issues with Europe. So there were some barriers that were put on that caused those flows of grain to slow down. When you look at our sales so far this year versus last year, we are behind, but I do think that will pick up later in the season. Yeah, I don't know, because it's only a couple months of this data, so I do think they have been picking up a little bit more as we move on. Italy, almost exactly what we saw last year. Last year was a very good sales year into Italy. The Canadians were up a little bit from the year before. They're back down to more probably typical levels we would see right now. I also just want to point out Mexico is number 4. Now, we don't send a lot of navies into the Mexican market, but there is some product moving that direction. When we look at total sales today versus the same time last year, we're down a little bit, but last year's numbers were very, very strong. Okay, last year was a good sales export season. When we look at supply and demand, again, I look at domestic tends to be relatively stable. The exports tend to bounce around a lot because we have tighter supplies. Who's usually the first market to back away? It's the international market. So if we're going to see lower production, it usually means our exports are going to be a bit lower. Now, again, I don't want to put a lot of pressure on this particular company's forecast for exports because they will update those in about a month. Let's just look at the bottom line though. Look at the projected carryover stocks. Because our production was down, our acreage was down. We are tightening up that supply chain. And if you look at today's prices, Pinos versus navies, the navies are higher, about $2.100 higher for Pinos versus navies. Or the navies are higher than Pinos. Okay. Questions on dry beans. You can talk to me later if there is something you want to talk about privately. Let's jump into sunflower. Oh, the sunflower market. Man, is it hard to get information on flowers. It's just really hard. So let's look at total sunflower production. Now, again, the reason I put a little dash line, those are not official numbers. They're currently forecast. On Friday, we'll get the official number. Our sunflower production from total available supplies has been dropping. Now that's both oil as well as confection. So it's both oil and confection sunflowers blended together. We don't have that breakdown yet. We will on Friday. Okay, this is, I think we locked up again. Just click it. It should work. There we go. Thank you. So this is by type, production by type. So the blue line is total. The red line is oil only. Now, I don't have the new numbers. So that's from last year. I don't have the new numbers just because they'll come out on Friday. I just want to show you the vast majority of the sunflowers we produce are the oil varieties, not the confections. Not a big surprise to anybody. Okay. No, you're going to have to hit it again. How about usage? How do we use up sunflowers? The blue line is crushing. Okay, the blue line is crush. And again, the little dots on the far right-hand side of the current USDA forecast for crush demand. Domestic demand tends to be pretty stable. It bounces around a little bit, but it's been pretty flat for quite a few years. So there's a core base for oilseed crushing. And as farmers, we usually think about crush demand as that big one, right? That's where we send all of our flowers is to a crush plant. Well, that's true to a point. When we look at the red line, which is essentially everything else, that would be confection flowers for like salted seeds, human food. It would be for bird food market, right? Those are the two big ones. They actually have a much higher percentage of usage but it tends to be what we call the residual market, that dump market. If we don't send it to a crushing plant, how do we use it up? It tends to be either in the bird food sector or again for the human food, right? Okay, we don't have much for exports. We have a little bit of imports. Most of that comes from Canada. Very little exports. I have to click it again. I'm almost done, guys. What about pricing? Because it's primarily, sunflower is primarily priced as an oil seed. So again, rephrasing that, the oil crushing is kind of a driving force behind the marketplace. Whatever we can't send to a crushing plant goes where? Usually bird food, but possibly human food. The highest value is usually human food because they're the pickiest. You got to have almost perfect flowers to go into, sunflowers to go into, can't have any sclerotinia or anything in there, right? They're really picky about that because it's human food. You got to use FDA requirements. Okay, so the highest value is human food. The second is crushing, and the third, the dump market. Whatever else we have goes into bird food. Okay. So let's look at pricing. A lot of the poor pricing and price movements for sunflowers is because of the oil market. So I want to explain this. This is coming out of Cargill and West Fargo. The reason I use Cargill is because they have, for the same plant, they both have an oil bid as well as a canola bid. And I can start comparing those. Black line is oil sunflower, the hyolaics. The red is the canola futures price. And the blue is the canola cash price. So you see a correlation between canola and sunflower? Yes. Okay, what is the typical relationship between canola prices per 100 and sunflower prices per 100? Sunflower usually is at a bit of a discount, usually $1, sometimes $1.50 discount. But it has the same trend. Until when? What just happened this year? It flipped. Sunflower is now above canola. There's a couple of reasons for that. I don't have time to go through it in gory detail. My point is the relationship still holds as far as daily movements up and down. They're tied together very closely, but they have now flipped because of the lower production of sunflowers. It's taken us a while. But we've been able to finally work through that mountain of flowers that we had built up over the last couple of years. We had some really good acreage. We had good production. We had a lot of inventories of sunflowers trying to find a home. A lot of that went into the bird food market, which is what you see from the previous slide. Okay, so next slide. I promise I'm almost done. So we have a futures market for canola in Canada, which is the red line. It's scaled on the left-hand side. I have not converted to dollars per, this is still in dollars per metric ton, not in dollars per pound. It's in Canadian dollars because it's just easier to do that. The blue line is soybean oil. So this is soybean oil. Do you see a correlation between soybean oil prices, which is a much, much bigger market? It's like 10 times bigger than canola. And the canola price. Pretty close, right? So if there's a really strong correlation between soybean oil futures and canola prices, and there's a strong correlation between canola prices and sunflower prices, what does that mean that you can use as a proxy? So soybean oil futures can be used as a rough proxy. So my point is, in my opinion, you can get general price direction, but there's always a little bit of a lag, a delay. You see oil prices increase rapidly. It's going to take a while, probably a week, maybe 2, before the sunflower price starts to come up. Okay, so if you're trying to figure out kind of pricing dynamics in the sunflower market, that is a proxy. That's something you can use as a measuring stick to say, well, are we flat? Are we in an upward trend, a downward trend? There's a little bit of a delay, a little bit of a lag, but there's enough correlation there that that's something that I do watch. It's not perfect. It doesn't work all the time, but it does give you a general idea of what's happening in the markets. because it's a lot harder to try and get good information about what's happening in sunflower. Does that make sense? Okay, I think I have one more slide. This is the canola futures. I know there's a few guys in the room that do canola, right? And we won't get, this isn't a canola talk, but I'm going to talk a little bit about it because of the correlation with sunflower. We've had this is kind of a price volatility in canola. Do we have some upward mobility in canola prices? Yes, we do. But we're going to have some help from the general oilseed market. Because canola follows the soy oil market very closely. Soy oil is really highly dependent upon what happens internationally. So I'm going to give you one clue here, not only for canola, but also for sunflower. You're starting to hear in the news that there's more and more concern about the soybean crop in Argentina. It's in good condition so far, but the weather forecast is for hot and dry. Okay, now the plants are still really tiny, so we got some growing weather ahead of us, right? But if it gets hot and dry in Argentina, that will have an impact on the soy oil market, because almost all the soybeans in Argentina are crushed into oil and meal. The largest exporter of soybean oil in the world, soybean oil, is Argentina. If they have a production problem, soy oil prices will start to recover. They can recover and pop actually pretty quickly. So if that happens, if the soybean oil internationally becomes tight, what does that mean for US soybean oil? Has more value, right? If soybean oil has more value, what does that mean for canola oil and sunflower oil? You see where I'm going with this? So even though you don't think about, oh, a weather problem in Argentina might impact canola and sunflower prices, because of these linkages, because of the substitution that goes on, you can see that price response. Because people all of a sudden say, well, if this gets to be too expensive, there's something else I can go to and substitute. There's some other oil that I can use as a replacement for, because it gets too expensive for me. So just some things to think about. Last slide is just questions. Anything on sunflowers? I hope I didn't take too long. Anything on flowers? I'll be around pretty much all day. I know I'm going to come back later on this afternoon. We'll do a general market outlook with Randy Martinson.